Ladies and gentlemen, digital investors, welcome back to another video. Here are some of the things we're going to be going over today. We have US banks exploring whether to support Bitcoin and crypto assets, says top regulator. We also have former Google lawyer joins spate of high-profile attorneys entering crypto. So yet even more big players entering the crypto arena. We'll also be going over crypto traders looking for big returns on Bitcoin. It needs new strategy as whales like me get involved, says Michael Saylor, who's the CEO of Microstrategy. Microstrategy is a company that has 425 million US dollars worth of Bitcoin. And Michael Saylor also has about 17,000 Bitcoin, and he kind of gives this new strategy for investing with new whales like him coming in. So it's very interesting. Definitely stick around for this. We also have Bitcoin is about to post its highest monthly candle close ever as bulls roar. So we're going to start off here because Bitcoin reached up into the 14,100 area last night, and this has huge implications for Bitcoin on the price of it, what's going to happen in the future depending on where we close this monthly candle. And keep in mind, this monthly candle closes today. In about 4 hours we close the month, so this is huge. This is where we're going to start off. If you guys are frequent viewers of the show and you'd like to show some support, a like is greatly appreciated and helps a ton with the YouTube algorithm. So tap that like button and let's get into this. So Bitcoin has seen a strong upsurge throughout the past few hours that allowed it to break above its previous $13,800 resistance level. The selling pressure here has proven to be significant on multiple occasions throughout the past year, and today's break above this level is extremely bullish. One trader is now noting that the cryptocurrency is about to see its highest monthly close ever if it can hold above $13,863. A strong break above this level will lead it to some serious gains and potentially put a move to its all-time highs on the table. Bitcoin is currently outperforming the aggregated crypto market as its price rallies up to its key $13,800 resistance. It broke well above this level overnight, hitting highs of 14,100 before losing its momentum and declining back to this level. If it can flip this resistance into support, it could act as a launch pad that leads it to see significantly further gains. One trader is now noting that a monthly candle close above 13,863 would also mark the highest monthly close ever seen by Bitcoin. This would be technically significant and potentially lead to serious upside in the days and weeks ahead. Yes, it absolutely would. Here is a chart that they posted, and as we can see, I'll zoom in on this a little bit for you because I don't know how good you guys can really see this. So if you look at this level here where price action currently sits, you can see it's on this candle and there's a line going off both ends of this candle. And as you can see, if you look above this line, there are no candle bodies anywhere above this line. In fact, the only thing that is above this line are candle wicks, right? So back in 2017, when we had our blow off top at 20,000, the candle body only closed where we are right now, right at about 13,863. But above that, there is no candle body closes, which means that price action went in there, but we didn't close a day or a month in that area. Right now with this monthly candle, if we're already at basically the resistance, right? We've hit it, we've actually went over it, we went to 14,100, but now we're sitting back below it, right? So a little bit of selling is taking place, but with this candle closing in 4 hours, closing today, there's still some room to get above and close above this. And if we do close above this, that is very significant because it is the first monthly Bitcoin candle to ever close above that area, and that would show that there is a lot of bullishness within Bitcoin. It shows a shift in the way people are thinking about Bitcoin, a shift in how investors are investing and traders are going to start investing into Bitcoin. And if we close above that level, it ultimately leads Bitcoin up to testing its old all-time high. Now, what happens there with retracements and stuff, I'm sure it's going to be a bumpy road, but that's basically the scenario that we want, right? Is that if we close a monthly candle above here, that's a good indication that we'll probably soon test our old all-time highs of around $20,000. The coming several hours should provide investors with serious insights into Bitcoin's outlook for the rest of the year. Yeah, I would highly agree. For the rest of the year, if this closed above, that would be exceptionally bullish. That would be amazing. And if we close below it, not a big deal. We'll just be staying at these prices for a while, maybe go back down, build up some support. But long term, I'm bullish on Bitcoin. We see way too much money coming into this space. We see way too many players coming to this space, like PayPal, for example. Also, today is Bitcoin's 12th birthday. So happy birthday to Bitcoin. Make sure you pay Bitcoin your respects and leave a happy birthday Bitcoin in the comment sections below. Let's blow it up. Let's see how many happy birthdays we can get for Bitcoin. Yeah, so Bitcoin is 12 years old, guys. 12 years old. Next year, it'll be a teenager. Now let's move on to crypto traders looking for big returns on Bitcoin need a new strategy. Okay, that's alarming because, hey, you know what? Me and you are crypto traders, crypto investors. So now we need a new strategy. This is coming from Michael Saylor because whales are moving in, he says. So in a new webinar with Dan Held, the growth lead at the crypto exchange Kraken, Michael Saylor says people who are waiting for Bitcoin to crash or buying and selling on a daily basis should change their approach, as Saylor expects much more large entities like himself to stampede into Bitcoin. That's right, guys. Remember, it's a snowball effect, right? Microstrategy first, then Square, then Stone Ridge, but they're going to start coming in a lot faster and with a lot more volume. He points to the devaluation of the Argentine peso, a potential future drop in the value of the US dollar, and the manipulation of currencies around the world as prime examples of why investors should simply buy Bitcoin, hold on, and trust in the scarcity of the asset and the durability of the network. What he says exactly is, in a world where everybody is dissipating energy, preserving your energy is the winning strategy. They might be dissipating it by holding it in dollars. They might be dissipating it by trading all the time. Trading is dissipating energy. All of this buy it and sell it and move it around and convert it, all of the running around is dissipating energy. The winning strategy is stop dissipating energy because everyone else is dissipating energy so fast. Guys, if you take a shot every time I say dissipating right now, or Michael Saylor, I think you're going to be hammered. This is the Microstrategy Bitcoin drinking game. Get ready, everybody. If I have 100 million sitting in cash, I'm dissipating it 15% per year doing nothing. Just flipping it to Bitcoin and doing nothing means that in 10 years, the cash goes to zero and I still have 100 million worth of energy. If 99% of society takes the other trade, in 10 years, you'll own everything, which is what Bitcoiners understand. You're preserving energy in a world where everybody else, where 99.9% of the money is dissipating energy. If you're the 0.1% that is preserving energy, when 99.9% of the asset holders are dissipating energy, that's enough. That's a pretty wise thing. Everybody thinks you need to do something with it. They just don't understand it. Saylor recently revealed he personally owns 17,732 Bitcoin worth about 235 million. Obviously, that's at the time of this article's writing, which is separate from the 425 million his company has invested in the leading cryptocurrency. Michael Saylor says on this, I paid $9,800 a Bitcoin. And for those of you guys who don't know, that's Michael Saylor's average Bitcoin, but MicroStrategy's average buy, because remember, MicroStrategy right here is 425 million. MicroStrategy bought their Bitcoin for about 11,100, so even higher than what Michael Saylor paid for. So anyways, just in case you guys should know, which I think you should. So he says, I paid 9,800 a Bitcoin, a lot more than most holders paid. I wasn't thinking if I sit around, maybe it will go back to 4,000. I was thinking I'm a rational person reacting to rational circumstances. What if other rational people with more money than me have the same idea I have, in which case I'm going to have to chase this thing to 20, 30, 40, or 50,000. Hence the phrase, once you understand it, you go to bed at night with anxiety, feeling chronically short. I was worried the rest of the world will start acting rationally. All the people that think they know Bitcoin, that sit around and they whine and they lament. I'm going to wait until it goes back down again. I'm going to wait for a crash. I think they don't really understand Bitcoin, because if they understood Bitcoin, then they would be thinking, the only thing I worry about is how do I figure out how to buy more? If you thought that you're going to get those kinds of returns, then you're really looking out to when it's worth 100,000 or when it's worth $1 million a coin. And then you're saying, what's the consequences if I didn't buy one? That's kind of like the same thought process I eventually had as well. I could honestly really relate to that, where once I really understood, not even just Bitcoin, but other cryptocurrency projects as well, once you really understand it and you see where it's going and you see the type of companies that are investing in it, yeah, you feel like you need to own it, and you need to own it quick. And it's almost like you don't even really care. Like even now, right? Cryptos will pump And then I'll tell people, guys, don't FOMO in. But in the back of my mind, I also always know, if you're going for the long term, right? If you're going for the long term, buying Bitcoin at $11,000, $12,000, $14,000 is a good buy. It's not necessarily a good buy today, but when you look at it 10 years from now, obviously it's a very good buy. That's why I think one of the best Bitcoin investing strategies for people who aren't traders and don't know markets that well is just DCA, right? Just dollar cost average into Bitcoin or whatever cryptocurrency it is that you want. So you can over time get a solid position in and pay a relatively decent price for it, right? Rather than FOMOing at the top, selling bottoms. If you really want to invest into this space and you don't really know what you're doing, DCA is an insanely effective strategy. And most importantly, it's a safe strategy, right? I think the best thing you can do is do DCA, and then you could branch off from there, right? Like you could start trading after, for sure, if you want to, because a lot of people get in this space and they start trading, but stick to a foundation, right? Stick to a core. Like, okay, I'm going to DCA this much per month period, because I need to do that in order to build up my position and make sure I actually build up a position. And then if you really want to trade and fool around with altcoins and stuff like that, then maybe have a separate pile that you do that with. But always have your core fundamental, this is my investing strategy. And I think DCA, whether that's for Bitcoin, altcoins, stocks, anything you want to get into, DCA is proven to be an extremely effective method and an extremely safe method over time. That's just my opinion, not financial advice. Hopefully it helps one of you guys out there. Now, we'll also go over this. So this is Gerald Celente, and he says, I was asked recently, what do you think the time frame is for implementation of a digital currency in the US? And this clip is my reply. I thought this was very cool, and I'm just going to play it for you guys.
What do you think the time frame is for implementation of a digital currency in the US? It's hard to say. They could do it tomorrow. But here's why I think they'll do it. And this is what I would look at. And that is when the markets crash. When things crash big time, that's when I think they're going to do it. That's what's going to be the game changer. They'll force it in and push it out.
It makes sense, guys. It really makes sense. Back in 2017, I thought that, when back then when I was looking at it, I was like, you know what? It'd be really interesting if on this next run up, right? Like after it was obvious that Bitcoin was not going to $100,000 in 2017, because a lot of people believed that, right? A lot of people were buying Bitcoin at $20,000. Expecting that it was going to 100,000, right, in that time frame, and it just wasn't. The reality was that Bitcoin had already went up so much, and in 2017, $20,000 was all that Bitcoin could really get up to, right? 100,000 was still years off, which we're seeing now. We're in 2020, almost 2021, and we're not at $100,000 yet. It still hasn't happened. But back then, I always thought it would be really weird if Bitcoin was going up and cryptocurrencies were going up while the market crashed. And I said on this channel repeatedly, it seems like with Bitcoin and cryptocurrencies, we're entering the perfect storm, and it's really weird because I'm starting to see that storm is coming, ever so more prevalent, where we see Bitcoin is making some great bullish foundations. Even Anthony Pompliano a couple days ago, I might have the article in here, or I might have it on tomorrow's video, but he was saying that he thinks that Bitcoin is now decoupling from the stock market, and I've heard other people say this as well, right? Along with, we hear a lot of things about gold as well, and what that's doing, and what silver is doing. But it's going to be really, really weird to see if Bitcoin and cryptocurrencies really start taking off while traditional markets are crashing. We know that Bitcoin was born out of bad times, so it's going to be absolutely interesting to see how it performs during these potentially bad times. If you guys are enjoying the video, then subscribe and hit the bell so you're notified every time that I upload. Otherwise, you probably won't know when I'm uploading. You'll have to keep searching me up. So if you subscribe and hit the bell, YouTube will keep recommending you my videos, and I make a video like this every single day covering Bitcoin, altcoins, and everything going on in the crypto space to keep you up to date. If you guys could also do me a favor and drop this video a like, it helps a ton with the YouTube algorithm picking it up and pushing it to more people. So your likes, your comments, it's all greatly appreciated. I always appreciate any support that you choose to give. Now, our prices for today, Bitcoin as of right now is sitting at 13,754. We can actually give this a refresh. Yep, so still about the same. Ethereum at 386, XRP sitting just under 24 cents. We have Chainlink at $11, Litecoin at 55, Cardano at 9 cents. We have Monero at 126, Tron at 2.5 cents, Stellar at 7 cents, Tezos at $1.98. Let's see what VeChain's doing. VeChain under a penny. I know a lot of you guys love your VeChain, and on the 7-day, it's down 18%. Remember, are you buying when there's blood on the streets, or are you going to FOMO into this market once PayPal lets everybody start shopping with cryptocurrency, right? That's the question you got to ask yourself. That's kind of the exact question that we just went over with, who was it? Michael Saylor, right? Michael Saylor, that these whales are going to stampede into Bitcoin, as he says. Our fear and greed index for today is sitting right up at 73. Yesterday we were at 74. Last week, 73 as well. And last month, remember, we were in fear last month, right? Everybody capitulating, everybody getting out of the market, and look at how fast things have changed. Remember, guys, things change in this market on a dime, and if you're not paying attention, you just kind of get lost. Now, we also have the former Google lawyer joined spate of high-profile attorneys entering crypto. On Friday, Coinbase announced the appointment of former Google senior legal director Milana Mikola as deputy general counsel for product and commercial legal. Mikola, who worked for more than 13 years at Google, will work across functions at Coinbase on product legal support, helping the firm to streamline legal compliance for new products, right? So we're seeing more and more people get into the crypto space, right? Why? Why are more people getting into the crypto space? In fact, why are smart people, right? Lawyers who worked for Google for 13 years and they're working with a company like Coinbase, right? Why? It's because they see the adoption is coming. The writing is on the walls, and they are setting and positioning themselves up now. At least that's my opinion, right? Why would you leave a sector like Google to get into a sector like digital currencies if you didn't think there was more potential in that arena? Just my line of thinking. Let me know what you guys think below. We also have US banks exploring whether to support Bitcoin and crypto assets. So let's get into this. The acting comptroller of the currency, Brian Brooks, who is also a part of Coinbase, says US banking institutions are investigating ways to support crypto assets for interested clientele. In an interview with Laura Shin, Brooks shares his insights on the ways in which US banks have begun to explore the pathways toward crypto adoption in the wake of the OCC's decision to grant banks the right to provide custody for cryptocurrencies. The OCC's letter awarding banks custodial rights to crypto assets was released in July, clarifying that banking institutions should be able to safeguard customers' most valuable assets, which today for many include cryptocurrencies. Shin addresses the OCC's determination, asking Brooks if he's seen a change in attitude towards cryptocurrencies from large financial institutions since the letter's publication. And what he says is, well, what I have heard in the grapevine, and I'll bet a lot of your listeners have heard the same thing, is that since our letter came out, a number of big crypto custodians such as Anchorage, Coinbase, and a number of others have been contacted by banks about whether they'd be willing to be like the third-party custody providers for national banks whose customers want to invest in Bitcoin. So in a world where you've got major institutional endowments like the Harvard and Stanford endowments who are invested in significant amounts of Bitcoin, in a world where you have institutional investors looking for a qualified custodian for their Bitcoin and everything else, I think it is pretty likely that the trajectory will be that banks will not want to build their own custody capacity. This is very technically complex, but what they'll want to do is either buy crypto custodians or partner with crypto custodians to provide those services on their behalf, and now they can legally do that. Brooks also says that he noticed an almost immediate reaction in crypto market prices following the letter's release. He says, honestly, one of the most interesting things is that I observed shortly after that letter came out, Laura, was that the price of most crypto assets went up in a few days following the release of that letter, which I think signals that institutions felt safer in investing in an asset that they have custody in the bank. In the long term, Brooks adds that increased banking support for cryptocurrencies could open up the space to the average investor who is currently reticent to jump into the crypto market. He says, so if your average person thinks it's prudent to have 50 basis points of their net worth in crypto, which a lot of investment advisors say is a prudent allocation, they're going to feel much safer knowing that JP Morgan is the custodian of their crypto than feeling like the custodian is some entity they have never heard of in South Dakota. So I think the demand increase is going to be noticeable. According to Brooks, there are currently 40 or 50 million Americans who own crypto assets. So that is what Brian Brooks says. So basically, these banks got the custody crypto services, right? We covered that a couple months ago, and they're looking to partner with companies like Coinbase to provide the service to their clients on their behalf. So this is what he's saying, right? And also keep in mind, Brian Brooks is the acting comptroller of the currency, right? He's kind of calling the shots here, or at least has, he has his hand in it, right? And not only does he have his hand in that, but he also has his hand in Coinbase. So of course he's going to offer these banks custodial services for them on their behalf. He's making money all the ways around, and this is why we talk about a Bitcoin and cryptocurrency bull run, because of all the adoption. The floodgates are being open, the rails are being there. The Bitcoin and cryptocurrencies of 2017 are not the cryptocurrencies of 2020. These things run better, they run faster, they're more efficient. There has been a lot of progress, there's more developers, there's more investors, there's a lot more people educating themselves about Bitcoin, right? The use cases are becoming more and more prevalent, especially ever since the pandemic. The use case for cryptocurrencies, right? Private money, sound money, money that can't be tampered with, right? Money that's not going to be inflated into oblivion has become ever more needed. So with that said, hope you guys enjoyed the video. If you did, subscribe and hit the bell so you're notified for tomorrow's upload, and I'll see you all on the next one. Have a great day, everybody.